Hi friends, I hope everybody is doing great. In this video, I am explaining about accounting and its concepts. We know there are 14 accounting concepts, out of which I am explaining only 5 among them. Starting with definition or a meaning of an accounting, as I mentioned here, it is a systematic process of identifying, recording, classifying, summarizing and communicating financial transaction of the business. In a simple way, I could tell you many transactions happens in a business, but we should know for what purpose money has gone out, or we should know from where the money has come. Everything has to be recorded, no? That is the reason accounting is very important. Starting with an example, recording cash sales. Here I mentioned there is a cash sales of rupees 60,000. So how do we record this? Normally, we made a cash sales. So entry would be we are receiving cash, debit to sales we are crediting. This is how accounting will be done. So we have identified there is a sale. We are recording by passing 2 entries, and we classified one as an asset, another as an income, and we are communicating the financial transactions. And even in the same way, starting with an example, another example, we made a purchase of machinery 20,000. How do we record? Machinery account debit to cash account, 2 lakh debit and another 2 lakh credit. We know that we classified machinery as an assets, what is coming in, and we made payment by way of cash. So this is how normally accounting will be done. You may ask, what is the purpose and what is the use of an accounting? See, it is very simple. When we record all the transactions in the books of accounts, it would be easy for the investor to know the financial position of the company, so that investor get into the business to invest, and even many creditors will come, and even bank will also grant loan to any business based on the financial position. These are the few examples and basic knowledge about the accounting. Starting with accounting concept, the first one is a business entity concept. In this concept, business and its owner are treated as 2 separate entities where personal transactions are not recorded in the book of business. It is very simple. If the owner incurred any expenses and that expense belongs to the business, you record in the book of account. Another, if the owner incurred his personal expenses, that should not be recorded in the books of account. That is all about this concept says. I'm explaining with an example. Owner pays electricity bill and rent of the business premises, suppose 30,000. How it will be recorded? Since it is a books of account of the business, 30,000 belongs to the business and it will be debited. That is electricity bill expenses 30,000 and rent paid 30,000, we book it as an expenses. In another example, if owner pay home electricity bill, do we record in the business P&L? No, we do not record in the business P&L, because it is the owner's personal expenses. It will go to the drawings. This is how business and owners are treated as 2 separate entities. And the next concept is money measurement concept. In this concept, only those transactions that can be measured in monetary terms are recorded. Non-financial items are not recorded in the book of account. Starting with an example, if you paid a rent of rupees 12,000, see here monetary terms exist. So in the P&L, we record it as to rent paid 12,000 rupees. And another example, purchased the furniture. Yes, 15,000 monetary terms exist. So in the balance sheet, it will go on the asset side. That means furniture 15,000. Yes, monetary terms exist. But good reputation of the employee, we can say good reputation of the employee, but these item cannot be monetarily measured. That means in P&L, I cannot debit it as good reputation. No. Skilled employee hired, it cannot be measured monetarily. If you paid salary to this employee, we can debit to the P&L because it is a monetary terms. Skilled employee and a good reputation cannot be measured monetarily, therefore it will not be recorded in the book of account. This is what money measurement concept explains. And the next concept is going concern concept. Here, the business is assumed to be continue operating for the foreseeable future. Instead, it is not expected to close down or be sold in the near future. It is very simple. When we're recording transaction in the books of accounts, we assume that business will be continue for the foreseeable future. It will run for the longer period. We do not assume it will close or it will incur losses in the very next year. By assuming that, going concern concept explains. For example, machinery depreciated over 10 years. Since going concern concept exists, machinery depreciated over 10 years. Suppose you buy machinery worth 5 lakh rupees. Because of this concept, we first record the machinery on the asset side of the balance sheet. In the balance sheet, we record it on the asset side. This is the liability and it is assets. So machinery will come here. Okay, and later in the P&L, we add a depreciation amount. Assuming it is a 5 lakh rupees and since it is for 10 years, we debit 50,000 rupees. That means we are depreciating 50,000 rupees over the life of the machinery. So that is why going concern concept says. Going concern concept says we first record machinery on the asset side of the balance sheet and later we depreciate over the life of the asset. And another example, company takes bank loan for 3 years. Since going concern concept exists, first we record loan on the balance sheet. This is the liability and this is the asset. We record on the liability side, that is to bank loan amount. Then we repay over a period of 3 years. We are not directly recording in the P&L machinery purchased because going concern concept exists. So either we are not debiting the bank loan in the profit and loss account also. And next is the cost concept. Assets are recorded at their original purchase cost, not at their current market value. As per this concept, if you purchased any assets in the book of account, asset will be recorded at cost. That is what the cost concept explains. For example, land purchased for 10 lakh rupees, but the market price is 12 lakh. How do we record in the balance sheet? Land purchase on the asset side. We won't write 12 lakh rupees because this is the market price. Rather, we record 10 lakh rupees because cost concept says assets are recorded at the cost price, not at the market price. Again, another example, computer purchased for 30,000 and the market price is 40,000. Computer purchased, again the balance sheet, it will come on the asset side. Computer, we won't write 40,000 rupees because it is the market price. But cost concept says we have to record at cost price. Therefore, the cost price is 30,000 rupees. This is the correct one. Okay, and another concept is dual aspect concept. Under this concept, every transaction has two aspects and every debit entry has corresponding credit entry. I will explain with an example. Entry. So loan received from the bank 5 lakh rupees. Which entry we pass? Loan received from the bank 5 lakh rupees. We received bank. So cash or bank account debit to loan we have received. One entry is a debiting and another entry we are crediting. Under this concept, asset will be always equal to liability plus capital, and here capital is the owner's contribution, what we can say. I will show how asset will be equal to liability plus capital in these examples only. Let me take second example first. When loan received from the bank, what happened? Cash balance will get increased. Cash balance will get increased and loan balance will also getting increased. Normally, how does it happen? I will explain. In the balance sheet, liability side, asset side, we are getting a cash worth 5 lakh rupees and we are also getting loan. We are receiving loan. So assume it is a bank loan. 5 lakh rupees. So formula says asset is equal to liability plus capital. Here asset is 5 lakh rupees. Liability is 5 lakh rupees. We do not have capital in this example. So I mentioned it as a 0. But finally it got matched. So these are the accounting concepts which I explained, and there are another remaining concepts which I will explain in my next video. I hope I made the concept little easy for your understanding. Thank you.